So then, Declan, there's a lot of talk about AI bubbles, tech bubbles. Can't think of any other bubbles right now, but a lot of it is in the financial press.
Indeed.
And a lot of it is saying it's going to burst. What do we think about that?
We can't predict whether it will burst. Certainly the valuations on those companies linked to AI-related products and services are very high in terms of their valuation. There are lots of talk about that because all the way through it's been on a promise of future revenues, their technology transformational will actually derive profits and revenue. The enormous amount of infrastructure spend that these companies have laid out is quite staggering. And actually they've been putting out corporate bonds as well as on their equity balance sheet as well. So when will it burst? We don't know. The fact that people are talking about it may be a dampener to that exuberance, because actually what we've seen through 2025 is the underperformance relatively of those stocks.
Yeah, good
and
point.
actually a much broader consensus regarding that. So when will it burst? Nobody actually knows, but there's lots of people telling you when they think it will burst.
Yeah, our markets are always controlled by two things really, aren't they? Profit and loss and sentiment. I'm not entirely convinced that they know which one they're following at the moment. It feels more sentiment based because they're not getting the profits through. And that, I think, is probably what will lead to, I don't want to use the word bursting, but there will be some form of correction. But of course, as you and I speak about often, corrections are a natural form of market cycles.
They are absolutely, and they were ever thus as well.
Yeah.
So the narrative that people are buying into regarding AI is very compelling. It's obviously mirrors some of the dot-com bubble regarding the internet and everything else that goes with it. The difference here is that these companies are very strong companies in terms of their other product ranges,
good point.
in terms of their profitability. However, it's the valuation that they've been stretched to that's actually... But investors and clients are very naive to think that markets are rational.
Yeah,
they're
that's right.
often irrational.
Well,
they're often buying into that narrative, and as you say, that story linkage.
I mean, markets have been here before, of course. I mean, we can think of, and we're not old enough to remember this, but railways in the 19th century, that massively life-altering technology, which did have a massive impact on life, obviously.
Yeah.
Probably more than it does now, because obviously the trains don't always run on time, but it had a huge impact. But of course, a lot of companies did fall by the wayside because they weren't making money quick enough.
No.
So there are similarities. I mean, I suppose that the view that I have is that there will be a tech bubble correction. Whether that's an AI bubble correction is a different conversation, because there will be tech companies more broadly than just AI, which will fall by the wayside, which is probably where there's a linkage with .com there, in the sense that obviously the internet worked and works now, but a lot of companies who were estimated, or guesstimated probably is a better phrase, to make money back in the early noughties, they just didn't. And I think there's a number of smaller companies, certainly not the FAMAGs, but smaller companies that will get caught up in that wake. So there probably is a tech bubble correction. Whether it's AI, I think, is a bit too nuanced, really.
Yeah, it's probably the over-reliance that economic growth has on that infrastructure spend at the AI companies. That's one of the danger signs there. But, investors have always said that correction's coming around the corner.
Yeah.
And a famous fund manager says, more money's lost by anticipating that correction than in the correction itself. It's a healthy dynamic of the market. So clients of Foster Novas shouldn't fear that, because they're investing for the long term. They have enough liquidity, cash in play for emergencies and for planned expenditure. So actually, what happens in the market exuberance should be very much less of importance than what happens in the longer term. Equities rise much more than they do decline. But when you take that's a function of volatility in that sense. It's
and your
entry price into the outsized returns.
Yeah, and your quote reminds me of another famous quote by another fund manager, says that when people try to time the market, because that's the connection here between AI and tech bubble, can I make sure I invest long enough to get the upside, but then pull out before it falls off a cliff? So obviously the famous fund manager says there are two types of investors, aren't there? ones who realise they can't time the market, and the others are the ones who haven't worked out they can't time the market yet. And it's important people remember that, because it's a bit of a fool's errand, really. But yeah, okay, so AI tech, yes, there'll be a correction at some form, because that's a natural part of the cycle. Whether it's specifically isolated to those areas, who knows?
And whether it actually then bleeds into other areas of sectors
Yeah, good point.
within US and broader, global markets.
And we can see that with the US last year, of course.
Yes.
US, everybody anticipated it being the greatest performing market, and well, it wasn't.
It wasn't, but actually, even in the US, the greatest the performance was from sectors that were unloved previously.
Yeah.
Goes back to the fallacy of past performance, like healthcare and financials outperformed technology and consumer services, where those high profile names are based. Actually, it's much more nuanced than that.
So let me go summarising this. So, will there be an AI bubble burst? Don't know. Will there be a tech bubble burst? Don't know. Will there be a bubble burst? Probably. Will it be this year? We don't really know, but one will happen, and it's a natural part of investing.
And what do clients do about that? They remain diversified across different markets, across different sectors, and they remain calm when that inevitable correction, for whatever catalyst it is.
It's the difference between investing and trading, isn't it?
It is.